Hey guys, good afternoon, everybody. It is 1:55 right now. Today's Monday, April 10th. Our scheduled mentoring sessions for 2 p.m. So I'm gonna give it a few moments for people to make their way in. And once everyone's in the room, we'll get started with our session for today. So if you guys have any questions, feel free to put your questions in the chat. I don't really have anything scheduled for today. Basically just gonna cover whatever you guys need help with. And then we'll go from there. So if there's no questions, we're probably just gonna review any entries that came up today. During and after the live session. There were none during the actual live session, but I think there was a couple that came up after. So we'll go over that stuff. And then if there's any questions that you guys have, just let me know and we'll go over anything in specific. So a few more things here to update and we should be good to go. All right, cool. Let me get this link sent out to you guys here in the premium. Got everything there. Perfect, link sent out. And let's get a few moments for people to make their way in. All right, perfect. One more place here and we should be good to go. All right. So, all right, guys, good afternoon, everybody. Today's Monday, April 10th. It is about to be 2 o'clock right now. Our scheduled mentoring sessions for 2 o'clock. So if you guys have any questions, feel free to put them in the chat. Otherwise, I don't have much to cover today. The main thing I'm going to look over is probably examples of our high-level momentum scalp, and then possibly look over the entries that came up today after the live session. There are no entries that came up during the live session. So, I mean, we're pretty much going to be covering stuff that happened after. Not trades that I took, but just trades that, possibly came up for you guys to use as reference. So. A couple more things here. And we should be good to go. So let's see. All right. So I think main things we'll be looking at today will be the entries from past live sessions. So I'll just rewind here, like basically 12 o'clock, or I'll rewind to like where we had the first entry or the most recent entry. And then from there, we'll go forward. So nothing over here. There's actually one entry here. So I'll go over this one first. This is the first one that came up. I don't even have to really replay it, or I could just play it from here. This is not an entry that I would personally take. This right here would be a high-level momentum scalp. Reason why I wouldn't take it is because this happened after 12 p.m. Typically, our entries will run up until 8 a.m. Or 9 a.m. at latest. If you want to trade after that time, typically 12 o'clock is a cutoff. So this is at 12:30 this morning or this afternoon, about like an hour and a half ago. This one came up at 12:32. I'll put the criteria for the strategy right here. So this is the high-low momentum scalp. First requirement is to identify the higher, lower, low. So for this one right here, actually, now that I'm looking back at it, there's no entry here because there's a high low in between. I just noticed that this one was right here. We did have a lower low right here. We had a buy signal right here, broken close past the pivots, but not one that we would take because there's a high low in between. There's a lower high right here. So with that said, Let's just move back to the next one. So I think the next one would be right here. So this entry right here again came after 12, not an entry that I would personally take, but it's just one example of entry that came up after the live session today. So with that said, looking at the first criteria, identify the higher high or lower low. There's a higher high right here. Second, you want to identify a valid momentum signal. There's a valid sell signal right here, red candle within the sell signal. So with that said, we have criteria 1 and 2 met. For requirement 3, you want to confirm that price breaks and closes past pivots 1 and 2. So with that said over here, this candle broke and closed past the pivots. And this would be the entry for a short. So with that said right there, criteria is lined up. Have the trade set up right there. You let the trade run. Kind of bounces back and forth a little bit, but then eventually it comes down and blasts right through TP. So this entry right here came up at 12:07. It's a little too late. I wouldn't be taking this trade, but if you guys were trading after the live session, this is one entry that came up right there. Going back a little further, there's another entry right here that came up closer to 12. Again, right here, identify the lower low. So it's a lower low right here. Identify a valid momentum signal right here. We have a valid buy signal. It's a buy signal with a green candle within it. Next step, you want to confirm that price is breaking, closing past the pivots. As you can see right here, this candle breaks and closes past pivots 1 and 2. So this would be an entry for a long position right there. Have everything set up there for 100 pips. Let the trade run. You can see it bounces around a bit before it shoots up. It's a full TP right there. So there's 2 back-to-back wins right there. Let's go back a little further, see if there's anything else here. There's another entry right here. This one looks like it might have been a loss. This one happened at about 11:31 a.m. So again, these aren't entries that I would take. I'm just going over examples for entries that came up after the live session. There were no trades available this morning, unfortunately, but these are trades that came up after. So there's a lower low right here. Buy signal right there is valid. Breaks and closes past the pivots. Again, right here, long position. The trade run looks like this one doesn't play out. Yeah, so unfortunately, this one here doesn't play out. So 1 loss, 2 back-to-back wins. Let's go back a little further. Again, these are none of the trades that I would take. Typically, the longest I'll go is past 9 o'clock. These are all like way past 9. So for this one right here, we have another entry. There's a higher high right here. There's a valid sell signal right here. Sell signal with the red momentum candle within it. Price breaks and closes past the pivots right there. So this again right here would be a short position. Same thing, 10:30 split. Trade would run and full TP on that one. Not one I'd take, but I'm just showing you guys the examples here. There's another one right here that happened right after it. So there was a lot of entries that came up after the live session, not ones I would typically take, but I'm just marking up the entries that came up. So again, right here, lower low. As you guys can see, the requirements are very simple. We're looking for higher highs, lower lows, and then from there, we're looking for valid momentum signals. In addition, we're looking for price to break and close past the pivot. So right here, lower low, valid buy signal, price broken close past pivots 1 and 2 right here. With that said, another entry, long position right here. You guys can see how simple it is to pretty much identify these if you were to trade these yourself. Again, right here, price swings around, full TP. So another win right there. Let's see if there's another one here. Nothing here, nothing here, nothing there. Nothing right here. This candle broke and closed below the pivot 2. Going back a little further, there's nothing here because this wasn't a higher high. Higher high right here, not a valid momentum signal, no entry there. No other entries here, nothing there. Nothing there because this broke and closed past it. So it doesn't look like there was any entries between 6:30 and 9. Basically looking from here, because I already know this because we were trading until 8 o'clock. So basically from 6:30 to 9, there was no entries for us. Let's go back to 6:30 over here. So this is where market opened at 6:30. And you can see there's no entries that came up. There's a lower low right here. Price broke and closed past the pivots before we got that momentum signal. So there's no entry right here. Going a little further right here, there's a higher high. Sell signal didn't come till way over here, and it was an invalid sell signal. So there's no entry here either. There's a lower low right here. This candle broke and closed past the pivots before this momentum, so there was no entry there. Higher high right here. This momentum didn't break and close past pivots 1 and 2, so there's no entry there. And that's pretty much it. I don't think there was any other possible entries. There was a couple close entries here. Like this was close. We wanted to take this, didn't close out properly, so we couldn't take the trade. And same with this one over here. This broken close past the pivots before we can get that buy signal. So there's two possible entries here that we were looking for during the live session. There was one right here, and there was one right here. But unfortunately, these didn't fit criteria, so we could not take these trades. Looking a little further over here to see if there's anything else that we would have taken. I don't think there was anything else over here either. So pretty much no entries from 6:30 to 9. A lot of the entries came after. So the first entry was right here that actually came up. This was at 10:45. So this was the first entry that came up. We didn't take it obviously because we don't trade this late into the session. But for others who were trading, this is what would have came up. Going a little further over here, there's another entry right here at about 10:55. That right there would have hit TP as well. So two back-to-back wins right there. Going over here, there's another entry that came up at about, let's see, 11:31. This right here did not play out. This would have been a loss. So 2 wins, 1 loss. There's another one right here that came up at about 11:47. This one here ended up playing out full TP. And then one last one over here that came up at about 12:06. So these are all the entries that came up today, guys. There was nothing during the live session time. Obviously, our live session cut off right here at 8 o'clock. There's no entries for us to take. If we continue to look until 9, there was still no entries. So the first valid entry that came up was at 10:45. So that's like pretty late into the session. As you can see right here, there's 1, 2, 3, 4 wins here and 1 loss. So if you took any of the trades today, you probably would have ended up in profit unless you only took like the 1 losing trade today. So 4 wins and 1 loss for the day. Other than that, there's not really much else that came up today. So if you guys have any questions or you guys want me to review anything else, feel free to put your questions in the chat. I don't really have anything else to cover for today. Today's barely Monday, so we don't have any other previous trades to look at for this week. Just keep in mind that the market's going to be kind of iffy until Wednesday. Tomorrow we have some news coming up, but it's not high impact. We actually don't have any actual news during the day. We have Fed member Williams speaking at 1:15 p.m., but that's going to be way after our live session. Actually tomorrow over here. So we don't really have many news events. We have Fed member Goldsby speaking at 10:30, and then we have another possible, or it's another Fed member. So this is basically Fed week, guys. Tomorrow we have Fed member Goldsby speaking at 10:30. We have Fed member Harker speaking at 3 p.m. And then we have Fed member Kashkari speaking at 4:30. This is way after our live session time, so there's no news around our live session. But on a Wednesday, we have a lot of high impact news. We have CPI monthly, CPI yearly, core CPI monthly at 5:30 pre-market. So you're going to see some crazy movements pre-market. And then later in that day, we have the G20 meetings. At 10 a.m., we have the 10-year bond auction. And then we have Fed Day at 11. So basically at 11 o'clock, we have the FOMC meeting minutes, federal budget balance, and some more Fed meetings later in the day. So this is pretty much all that we have. Wednesday is going to be the big day. So I think tomorrow will be kind of slow, kind of like today. It'll be kind of back and forth, no like big movements. But I think Wednesday pre-market, we're going to start to see a lot of movement because we have the CPI news. This is inflation news right here, core price index for monthly and yearly. And then we have the Fed meeting after. And then Thursday, we have some more core PPI monthly, and then unemployment claims. So Wednesday, Thursday, Friday market should pick up. But I think tomorrow market might be a little slow again, which is fine. We're coming back from a long weekend, so this is pretty normal. Market's not really stabilized and it hasn't really chosen a direction for the week yet, which is completely fine. Let's see. Nuan City wants to see how to trade. Let me read your question. I like to see how to trade on liquidate. I think you mean liquidity, right? Because I think you just mean liquidity. Yeah, okay. So you just want to see how these liquidity trades play out. I'll go over some examples for that, Nuan. Another question from Allison. Let me just go over Allison's question real quick because she's asking about the high-level momentum scalp. So let me see what she has to say right here, and then we'll go over to the liquidity trades right after. So Allison's asking, I've noticed when the strategy fails, it's because the same exact pattern of reversal I've been seeing that stops throughout in the London session. Also, maybe something to look at as a big pick kind of thing when to avoid, at least for me. It's because it's nearly every time. Do you have an example for when that came up, Allison? I can take a look at it and I can kind of, analyze it for you. You said during London, so I don't know if it was early London, late London. I guess we can probably look back over here because London session opened over here at midnight. This is London session open. If this was what happened to you last night, I'm not surprised because it's coming back from a long weekend. So I wouldn't have traded last night. As you can see from the candles over here, they're not good candles, right? They're very choppy. Let me just turn off the momentum signal because the market hasn't fully opened from the weekend. You can see how these candles here can't come out. Let me just turn off all the indicators so you can see things better. Like these candles are not good candles to trade in. You can see some of them, there's like no body. So I wouldn't have traded yesterday. Typically Sunday is like the worst day to trade. I would never like bother trading on a Sunday. If you trade London like middle of the week, it's a little better because the market moves smoother. But you can see these candles here. If I was to see these types of candles, I wouldn't even bother looking at the charts because you can see how blocky they are. Like there's some candles with no body at all, and that's a clear sign to show that there's no liquidity and there's no volatility in the market. So if you get caught in a trade here, it's usually because market's not really moving anywhere. It's just kind of going back and forth. But if you have a timestamp for here, let me just unmute Allison real quick.
So if you go back to where you had looked at all of the ones right there in that reversal right after, it was like 10:30. You said the first one was 10:45. It was the one that stopped us out, which would have been after the live session.
Let me see if I can. Sorry, I can't. Let's see.
It's just the same pattern. It's basically like you get a little bit of consolidation and then it starts like ranging and you have a little bit of higher highs and higher lows. And then it either, like if it's going for a reversal to the upside, it'll dip down super low and then it'll take off.
Let me see. I think it would.
I think it's about right there where you have your mouse.
On 12, right? Yeah. This one here, 1. Let me see. I know there's a 1 in between. This one here, 1, 2. So it might not be these. It was this one right here. Okay. So at 12:28, I believe. Is this one you're talking about? Allison, let me just rewind it.
I'm not sure, honestly. I just was looking at whenever, like all of the ones that potentially could have occurred today.
Yeah.
And it's just the same freaking pattern over and over. It's just something that I'm learning about. And like, I know the market repeats itself, but I'm even considering like looking at that reversal pattern as something to trade because like personally, I just see it. Like, I don't know if you recall anything about Wyckoff, but it seems to be every single day around the same time. It's like a midday reversal.
Yeah, and that's common. That's something that, like, if you see something like that, that's typically something that you should pay attention to because if it keeps repeating itself, it's usually a pattern and that's kind of what I was worried about this morning. So like this morning during the live session, we saw price kind of consolidate a bit and I would establish it as like a resistance or a support. And I would just kind of stay away from it because I was worried that it would reverse on me, like you mentioned.
For sure.
Look for that specific trade that I know there's one loss here. There's one that I literally just marked it up. But
yeah. Yeah, it was that same one. It's like price jumps up to the highest high of that moment and then it goes back down and it never goes back up. And that's the point where like I would sell at that point.
Yeah,
because
this one right here.
Yeah, it's like a pattern of reversal every single day. It's crazy.
Yeah. So yeah, you identify this properly. So this isn't, or no, actually this isn't an entry because there's a high low in between. I know there's one before it. Let me see if I can find it. Not this one. Actually, it was this one right here. Okay. So it was at 11:30. Yeah. So I know what you're talking about. Like right here, there's a lower low. You can see how price is kind of consolidating around this area right here.
Yep.
Basically around that point right there, right? And yeah, no, I see this sometimes too. This is what I was kind of worried about this morning when I was looking for the entries. No entries came up, but this is when I saw something like this, I would typically just stay out of it. But like you mentioned, if this is a pattern that you see a lot and price is probably going to not work for this specific trade, then yeah, you can probably take the opposite trade or you can wait for it. Like for example, here, if I was to do something and this would be speculative because it's not part of the strategy. But for me, for example, if I was to look at something like this and we're looking for this to push up. So the entry would be right here. what I would personally do if you have like, you know, an inkling that like price is going to reverse on you, I would probably let price kind of push up a little bit and then actually enter it for an opposite trade at where the entry point was. So I don't know if that's something you want to try out, because, you know, obviously if this is a pattern that you see very often, obviously, you know, it's a fake out, like price pushes up a little bit. And then if you had like a sell stop there, just waiting for price to take your trade, you could just write it right back down.
It's definitely something to consider. I mean, I don't have the experience that you do to like, you know, try to go out on my own and do something, but it's just something I've been noticing the last like 3 weeks, just the same pattern over and over. And
Yeah,
I'll
yeah,
probably try it
exactly.
on demo. I mean, I can keep you updated, but it's probably not something to consider for the group just because I feel like there's no like, I mean, yes, it's the same pattern, but it may look slightly different every time. You know what I mean? Whereas this strategy is just like pretty straightforward and
Exactly. Yeah. No, if you want to do that, like what I'd recommend is probably open a separate account, like a demo account, and just play around with it, because this is kind of something that you know, you can use to your advantage, because sometimes you'll see other people taking other trades other than the official trades, and they're kind of doing this, like they have an idea of like other patterns that play out, and they kind of just take speculative trades in that direction, even though there's no specific strategy for it. It plays out, you know, because the market's always evolving, and the thing with us is that we're always going to be changing with adapting with the market as well. So if you know, if you have this kind of locked down and you start to see this pattern very often, then yeah, it's something that you can take. Because the thing that I've noticed too, well, like over the years, is that, you know, sometimes with these momentum signals, you can kind of look for hints for when, you know, price is not actually going to work out. Like for example, here, you know, you have a sell signal, it's below the pivots, and the trend meter is probably red. So if you were to look at this here, you might have thought like, okay, this is possibly a pivot scalp entry. But if you have some other analysis indicating that price is going to do the opposite, like you know, you could take an opposite trade there. Instead of a sell, you just take a buy and then swing it to the upside like that. So yeah, if you want to study the momentum signals, like I think this is like a good thing for you to look at too, because like how you're kind of looking at them as any possibility, like you're basically analyzing them to see if price will probably not work out. And that's something that you can do too, because that's something that I do on the higher time frames. If I'm trading something, I'll look at the momentum signal. Let me see if I can find an example here. Because typically what I'll do is I'll look at the momentum signal and then I'll look back to see if there's like a reversal pattern. Like for example, right here, this is probably one. So like there's like a momentum signal right there. But if I was to just analyze this like by myself, I kind of see that there's a support right here where price is rejecting off it. So even though price is like bullish, and that's another thing too. So you see a momentum signal here, but trend is bullish, trend meter is green, pivots are kind of angling up, and I see a support right here. Instead of like identifying this as price to likely reverse, I would probably see this price bouncing off this point. So I'd probably just take it in the opposite direction. So yeah, something to play around with. I mean, if you see patterns like that, there's no like right or wrong way to identify the market. You know, everything that you see and everything I see could be completely different. But if you see a pattern that plays out and you see it, like I think the momentum signals are the best indicator to identify entry points, because price is going to go either way. Like for example, you have a buy signal here, price is going to go up or down, right? Price is either going to correct, is going to go in the direction of momentum, or it's either going to go in the opposite direction. So yeah, like you mentioned, if you see an entry for a high level momentum scalp and you think, okay, I've seen this pattern before and it looks like it's not going to work out, then you can either take it in the opposite direction or just skip it. Because I think that's, well, you know, best case scenario, you're able to skip it, and even better scenario, you'll be able to take it in the opposite direction and make profit off it. But yeah, you'll have to have like some sort of logic behind it, so you're not just taking every single trade and then, you know, getting lucky and then building up bad habits off that.
for sure.
Yeah.
Thank you.
Yeah, no problem. If you see anything else, you know, just write down the timestamp, and then maybe on the next mentoring session we can take a look, because we can see like the patterns just repeat themselves over and over again. So
For sure.
yeah. All right, Allison, cool. No problem. Let's move on to Nuwan's questions. And one over here is asking about liquidity. So let me see if I could find, I don't think we had a strong trend today, or we had kind of a strong trend. Let me see. So in order to take those liquidity push type trades, Nuwan, you have to have like a heavy direction. So like for today, we had, I mean, it wasn't very heavy, but we had retail sentiment that was pretty strong for a buy. Fundamentals were bearish, so it wasn't really one-sided. So let me see if I could find So market opened here at 6:30. Yeah, the market was kind of choppy today. So I don't think today would be a good example for liquidity type trades. There just wasn't much direction. I'll look back to Friday because I think Friday was a little better, if not Friday, Thursday. I know last week there was a couple of days that were really good. That were very like, one directional. So let's check Thursday over here real quick. All right, so I think Thursday might work better. Or let me just check Friday. I'm just gonna look from the 1, 5, and 10. That's pretty much it because we're looking for the direction of a bias, I guess. Or I can even look over here. Let me just rewind real quick. I'm just gonna use this as an example, but this isn't today isn't a good day to really apply this type of trading because there was no direction today. I'll just see if I can find any direction here. So I'll go up to 9 o'clock. I'm just eyeballing real quick to see if there's any liquidity pushes that could have been possible. Okay, so like right here, the reason why I'm looking right here is because we had retail sentiment that was like, I think 60% short. Yeah, it was like 60. It wasn't 60. It's 67 now, but it was like 62 or 63 earlier this morning at around 8 o'clock. That was when we got off the live. We were basically looking for buys today, but we couldn't catch one. So basically, when you're looking for these entries, you want to look for a strong direction. So you want to make sure that you have things heavily on one side, whether it be a buy or whether it be a sell. Looking at this right here, I'll just rewind to this here. All right, so I think this here would be a good example. So there's no specific strategy to this one. So like when you're applying this type of strategy, you have to know how to read the charts. So like basically the first thing I look for is to look for an overall direction, right? So in order for me to do that, I want to make sure that I can confirm the overall bias, looking at fundamentals, technicals, and retail sentiment. So looking over here at retail sentiment, obviously this morning it was at about 63% short. So this indicates that 63% of retail traders are selling. So we want to do the opposite and buy. The fundamentals today weren't very strong, but they weren't very heavy either. They were more on the neutral side. So right here, you can see market close at 101 points. So you can, this is what you would look at. First, you would look at retail sentiment. You want to trade opposite of retail traders. Everybody here is selling, so you want to do the opposite and buy. You want to look over the fundamentals here, and you want to make sure that it's above 100 points. So if it's above 100 points here, this indicates that fundamentals are strong for a buy. With that said, you have two biases here, retail sentiment, and you have fundamentals here, which are bullish. Looking over here at the technicals, you can see that price here is bullish. We can't really check. I mean, we could check back at this point, but we were already looking for a buy this morning. So you can just assume that it was bullish, right? So we want to make sure that price is above the pivots. Pivots are angling up, trend meter is green. Everything's kind of just pointing towards a buy. And that's basically what we have over here, right? Price above the pivots, trend meter green, same over here on the 10-minute time frame. So with that said, you can pretty much assume that you have a strong bullish bias, right? Because you have a strong bias here with technicals, you have a strong bias here with the fundamentals, and you also have a strong bullish bias here with retail sentiment. So with that said, you'd obviously be looking for a buy here, right? To identify liquidity or where the stop losses are sitting, basically the way that I identify liquidity is to see where people are placing their stop losses. So what I would do here is I would draw horizontal lines at the highs. Right? Because basically when people enter sells, everyone places their stop loss at the previous swings. So with that said over here, you can say, for example, if someone was entering a sell at this point, I don't know exactly where, but if someone was to enter a sell at this point, like right there, they would place their stop loss at the previous swing, right? Which should be right here. That's typically where people will place their stop losses around that point. And typically when people enter trades like this, they go for a 2-to-1 or a 2-to-3, right? Or a 1-to-2 or 1-to-3. So with this right here, let's see, iPhone said we can't see your screen. Could you guys see my screen, guys? Okay, never mind. iPhone said never mind. Yeah, it might just be your screen, iPhone. I mean, you probably like just blacked out, your screen will black out on it, but looks like we're good now. All right, so anyways, back to what I was saying. You're basically just reverse engineering the trade. So if someone here is entering a sell, right, from this point, and I'm just going to rewind a little bit. So say, for example, you guys saw this right here. Not that we would be looking for a sell because you guys know how I trade, and there's no way I'd be looking for a sell here. Everything here is pretty much bullish. But what we're doing is we're basically going into the minds of other retail traders. So if someone here is looking for a sell and looking for that reversal back to the downside, and say, for example, they enter a sell at this point, they put their stop loss right here at the previous swing because basically where everybody places their stop loss, right? And they go for like a 1 to 2 or 1 to 3 risk reward. So with that said, we have this all set up right here, and we have the liquidity marked up. But liquidity meaning people's stop losses, because that's where liquidity gets hit, right? When people get stopped out, liquidity pushes in that direction because it pretty much takes out everyone's stops, right? And then you just get a liquid push to the upside, opposite direction. So this is how I would identify liquidity. I wouldn't be in a sell here, obviously, because we have a strong bullish bias. I would only be looking for buys at this point. So with that said, if you have these set up right here, what you can do is when price breaks these areas, probably not this area right here, because you want like a heavy set, like in heavy area of stop losses. So like, for example, if other people entering sells right here. So I use this first example right here, right? If people were to place their stop losses right here, you already know there's like a bunch of stop losses just sitting around this area right here, right? That's going to be one area. The next area would be right here, right? Because if someone entered another sell right here and they put their stop losses around this point, then you got a bunch of stop losses right here, because you got people from the first trade sitting right here with their stop losses, and you got people from the second trade over here trying to catch the sell with their stop losses right there. So I wouldn't enter around this area right here. I would enter at this point right here. If price was to reach this point, I would go for a quick little, like just a little push, like 100 pips, like nothing crazy. You're just going for a little push to catch the liquidity push to the upside. I don't know if I would necessarily take this, because as I mentioned, today's not a good example because the bias wasn't very strong. But you can see right here when price pushes up, you can see at this point, price pushes up and hits this area. At this point, I would be in the position if I was catching liquidity, and I would let this push up. And you can see right there, it blasts right through the TP. So does that make sense, Juan? I'll go over another example, but I just wanted to show you how I identify liquidity. I basically just identify the swing highs. If I'm looking and I'm anticipating people to take sells, the reason why I knew people were taking sells right here was because I looked at retail sentiment and it showed that it was 67% short. So like you're going to do the opposite of them, right? If everybody's selling, they're going to have their stop losses placed at these swing highs. So that's why I would be looking to basically do the opposite of everybody. If people are looking for sells here, I'm going to be looking for buys. So there goes one example right there. Super simple. It doesn't always work out though. So you just want to keep that in mind. It doesn't always work out. It's a very risky way to trade. The only way I would trade this is if there's a very strong confluence of, a bullish bias. So let me see if there's any other possible liquidity examples that I can show you here. Okay, so there's actually a lot right here. This happened around 12 o'clock. The Fed was speaking today, so I'm not, I can't say exactly like what caused a push to the upside. I know the Fed was speaking, but again, right here, you can see prices dropping down. The reason, again, why I'd be looking for a buy right here is because all the retail traders are selling. So again, right here, 67% short. All you got to do here is basically mark up these higher highs, or not higher highs, just any highs, basically. It doesn't have to be a higher high. It could be a higher high, lower high, higher low, anything like that. You just mark them up right there. And you kind of want to identify where everybody's stop losses are sitting, right? So again, like I just mentioned earlier, you can see that probably a lot of stop losses are sitting right here. A lot of stop losses are sitting right here. And then this would probably be the target price point right here, right? Where it would end. Because at that point, all these stop losses would get triggered and all the push would be done at this point. When price gets to that point, it'll probably correct right back down. So again, here's another example of a liquidity push. I would probably have my buy entry somewhere around this area in the middle. So again, right here, see how this candle pushes up right there? At that point, I would have a buy entry ready right here. And I would do the same thing, just go for a quick push, right? Because if you already have this marked up right here, you already know the next target price point is going to be this area right here. And when price hits this area, it's probably going to push up even higher. So you have a buy entry waiting right there, have another buy entry waiting right here. And you're just catching this liquidity because when these stop losses get hit, that's where the stop loss hunt happens, right? You guys have heard that before, stop loss hunt. That's because all these people are getting stopped out. You can see that the retail traders are looking to take sells right here, and you're basically doing the opposite. So if everybody's looking for a sell here, you're doing the opposite, looking to outsmart them. So with this right here, price can push up a little bit. You can see it hits TP right there. It hasn't reached this area of liquidity yet, right? So you just wait for it. Price pulls back a little bit, and then it shoots back up right there. There goes the entry point. Right there, because it hits liquidity around this area. So when price pushes back up, right there hits liquidity, and it blasts right through again right there. So It's going up to full TP right there. And then, as I mentioned, price is starting to get exhausted right here. So once it gets to this high point, it's probably going to come right back down. Right there, price blasts right through the liquidity. So I'll clean this up a little bit so that you can see it a little better. You can see right here that all the liquidity got knocked out, right? I marked up all these lines here, and you can see every time price hit this point, it is blasted right through. There goes your stop loss hunt. So pretty simple. I mean, it's simple if you know how to read this stuff. For me, it's simple because I created this indicator for this specific reason. I was looking for like where people would place their stop losses, right? Exactly. So nuance is similar to a high-low scalp, except for this one, you're getting in earlier. So it's a little more risky, but it's a little more profitable because you're not going to miss that move, right? So like basically, like you said, it's similar to a high-low scalp. You either could have entered, I mean, yeah, it's literally just a high-low scalp, but for the high-low scalp, you're getting in a little later, right? Because you're waiting for the candle to close. When you're doing the liquidity push, you're not waiting for anything. When price touches that area, you're just in the position already. But if you look for the high-low scalp, you're like basically waiting for it to close. So same entry, it's just different entry points, but very similar. So, I mean, depends on how confident you're feeling that day, right? Like, for example, if you pull up and the market is very bullish, like it's like 70% short, the fundamentals are up like 200 points, the technicals are very bullish. At that point, you can just take the liquidity pushes because you don't have to wait for anything, right? You're just looking for that price point to get hit because that's structure where stop losses are being set. And you can just get in and out of those positions very quickly. So pretty much, yeah, it's exactly like a high-low scalp, but you're getting in a little earlier than usual. So yeah, pretty simple. You want to see another example, Noah, or are you good with this here? If not, I'll go over to the next question here from Allison. But if you want to see more examples, just let me know. Okay, perfect, Noah. Yeah, if there's anything in the future that you want to see, just let me know. I created all these strategies from scratch, so I know I haven't applied the liquidity push in like maybe a year, but I still know it like the back of my hand because it was such a good strategy at that time. If you were trading with me like last spring, the market was super volatile. So like every time we got a liquidity push, it was like an easy win. Like you'd see Kevin in like you guys know Kevin. Kevin was locking like 60K days, like easy. Let me see if I still have it here. Yeah, so Kevin, if you go back to like last year. So this is when Kevin joined the group, like last summer. So right here, he was trading and he hit like almost 100K on this day. This was on June 6, 2022. You can see right here, he was taking all liquidity pushes, like literally all day. Look like he locked in like 94K that day. And yeah, he was doing this like, so he locked in crazy profits. So yeah, the strategy still looks very good. It's just a very risky strategy. I don't like teaching people it because there's a lot of greed involved, right? Like what happens is a lot of people start to take shortcuts. Like how I mentioned here, you want to take trades where there's a lot of liquidity sitting, right? So right here, it's pretty easy because you have like a bunch of areas here to make entry, right? What happens with a lot of people is they start to get greedy. Like for example, like right here, I wouldn't take these liquidity pushes right here because there's not a lot of liquidity sitting there. There's like one or two, like, and they're pretty spread out, right? There's two highs right here, but they're not really next to each other. So you don't really have an area right there where people are placing their stop losses. So for example, here, even though this would have played out, I wouldn't have taken this trade here because it's not the liquidity that I'm looking for. I typically like seeing when there's high lows pretty much bunched up together. Like this over here. This is a better example. So if you were to draw your high lows right here, you see how these are next to each other? It gives you that gap right there to make your profit. So when price hits this point, you could take a long position right there for 100 pips, just a quick little in and out. And you can see how like if price hits this point, it's going to push right through to your CP. So that's why I don't really teach a strategy. This is more of an advanced way of trading, but you can see that it works very well if done properly. It's just people get greedy because they see these high lows and they think, okay, if there's a high low there, it's guaranteed to hit. A lot of times it doesn't play out that way. All right, so that's it with that question right there. Let me scroll up real quick. No problem, Noah. Next question is from Allison. Allison's asking, high-low momentum scalp. In what circumstances would you consider doing a buy-sell stop versus just getting into a trade as soon as the next candle opens? Trying to understand when the candle movements aren't too pretty right beforehand. Yeah, sure, Allison. Usually when I'm taking a trade like that is if the candle's too big. So let me see if there's an example over here. I usually do that when the candle's too big, because whenever the candle's too big, it's typically due for retracement. So I'll see if there's an entry here. Okay, so there's one right here. Let me measure the candle real quick. Okay, so I wouldn't consider this too big, but I'll show you an example of like how it happened. So like basically, for example, here, if you were to take a short position at this point, I know this isn't like a huge candle, but typically if you're setting your TP stop loss, and if the say your candle is bigger than the stop loss, right? Say your stop loss is 300 pips and this candle is bigger than the stop loss, then I for sure would use the buy stop or sell stop in that situation. This is one sort of example here, because if you measure this candle right here, the actual entry candle, this candle is about 120 pips, right? It's pretty big compared to these other candles. You look at these smaller candles in between it, this is like 20 pips. This over here is about like 30 pips. This other big candle over here is about like, it's about the same. So this here isn't like a horrible candle, but in a situation like this, if this candle was too big, then I would wait for it. Because you'll see right here, price kind of bounces around a little bit. So it drops in a profit, retraces up a little bit, retraces up a little heavier. At this point, I would have my sell stop ready right there, so that when price comes back down, it will fill my order and drop right into profit. So right there, price is waiting, still not in the position, drops down, fills my entry right here, late entry at that point. And then it goes down to my TP. So it's typically when the candles are too big. Let me see if I could find another example over here. Okay, so this is another example right here. Let me measure this candle real quick. It's the same thing. It's not very big because the volatility was kind of low today. If the candle was large, but you can see it's a lot larger compared to the previous candles, right? So this candle right here is about 120 pips, 120 pip candle, and you measure the ones prior. This is like under 100 pips. Obviously, these are all under 100 pip, right? So this candle right here pretty much engulfs all of these candles if you were to measure it. So if I also put this right here, you can see this candle is bigger than pretty much every single candle that passed within the past like 10 minutes or so. So this right here would be considered a little big. Again, it's not really necessary to do that. I just do that because I look for the better entry. And I don't like feeling worried about a position. So for example, over here, you let the position run. And this is more of an advanced way to think, because you have to think really quickly. These are 1 minute candles. So if you can't think about entering late, then you just got to enter right away. What happens with a lot of people is if you think too late, you're going to get in for a bad entry. And it's going to be worse than it would have been if you just entered right on time. So right here, you can see price kind of bounces up a little bit. Again, at this point, I put a self stop right here. So when it comes back down, it'll fill my order. So right there, it hasn't come down yet. Now it's filled the order and it goes straight to TP right there. So it's really just case by case basis. Today's not a good example for this type of entry because the market wasn't really moving very volatile. Let me go back to Friday. Maybe there was one on Friday. I can't remember if we had a trade that day, but I believe we had maybe like one trade. Yeah, so Allison, okay, so if you're expecting the strategy to work out, would it not be smart to enter on the retracement and ride for say 10, 110 or 120, or too risky? Actually, so that leads to my second part, Allison. So that's what a lot of people actually do. They wait for the retracement and then they enter a little later so that they get in for a discount. So if you feel confident about the position, then yes, I would do it that way. It's hard for me to tell someone else that's not really comfortable doing that because you're kind of entering in drawdown, right? Which is not a good thing to do. That's why for me personally, I don't really get greedy because I'm like used to just letting the trade run. And when we're on the live session, it's hard for me to tell people, okay, I entered at this point. Like, let me see if I can find an example over here. Because, a lot of people get upset about that. Like if I enter at some point, actually Friday was a holiday. That's why there was no movement on this day. But people get upset if I don't tell them exactly when I'm entering. So I always tell people I'm entering at the entry point, because if I enter for a discount and I get out for profit and someone else is still in that position, it didn't actually hit TP for the original position, people are going to be upset, of course. I'd be upset too if I'm like following somebody trading, they do something different of what's the criteria. So for me, it doesn't matter if I enter late. Sometimes I'll even enter for a discount, but I'm still going to count it for entry at actual entry point. because I don't want people thinking like I'm getting in at, like I'm doing something different than what I'm teaching, because I do exactly what I teach. So I don't know if there's another example here on Thursday around 8 o'clock. Okay, so here's actually no, there's no entry here because the candle already broke and closed past it. No, there's no entry here. I'm like purposely looking for like extremely large candles, like candles that we wouldn't normally enter on right away. Let's go to Wednesday real quick. I forgot which day had like crazy candles. I know it was like a couple of days last week, but all right. Okay, so this is an example right here, actually. And I think we did take this trade. Let me just measure the candle real quick. Okay, so this candle is not huge, but it's a lot bigger compared to all the previous candles, just like I mentioned earlier. So there's a higher high right there, sell signal. This would be a valid entry for a sell. But I wouldn't enter right away because like we mentioned earlier, you know, if you go back and just look at this candle, so this is the size of the candle. If you go back over here, it pretty much engulfs every single candle that passes it within like a 20-minute span, right? So for this right here, I would do the same thing and probably wait for that discounted entry. I don't emphasize this for people to do if you're new, because a lot of times if you do this, you're just too slow to catch the move. You know, by the time you hit sell or whatever the entry is, you're going to be in some drawdown already because you're going to be entering too late. So I would just recommend entering it right away. But like what Allison said, like for example, if it pulls up over here and I'm still confident about the position, like say price is up here and I'm very confident that price is going to come back down, I personally would enter at that point up there, but I would still go for 100 pips. So I'd get out a little earlier. So I'd probably get in at some point right here, and then price comes down and go straight to my TP. That's why sometimes you'll see people post profits and the trade is still running, right? I mean, you guys have seen that during the live session. Sometimes people will post profits and then we're still in the position. We're like, okay, I guess this guy got in for a discount. But typically they'll say something like, oh, I got in when price pulled back, and then they got in a little higher. So yeah, if you feel confident about the position, Allison, because this strategy typically hits, so it's eventually going to hit. So if you do want to get in for a discount like that, you could, but sometimes it doesn't pull back at all, and then you miss the entire entry like completely. So that's why I don't really recommend it unless like you know what you're doing. But yeah, that's something that you could do, because you know eventually it comes down and it does hit TP. So that's you know, another way of making entry for this specific strategy. All right, guys, if there's any other questions, you know, feel free to put your questions in the chat. I don't really have anything else scheduled for today. We pretty much covered all the entries that came up after the live session. Unfortunately, there was no entries during the live session, but that was anticipated. You know, we're coming back from a long weekend. Today's still technically, markets are closed for the European markets. So volatility was kind of all over the place, but it's all right. We still have a whole week ahead of us. So yeah, if you guys have any other questions, feel free to put your questions in the chat. Otherwise, looks like we'll be wrapping this up soon. Been on the session for about 44 minutes, about an hour. I'm willing to stay on with you guys. I just need some questions so we have something to cover. Otherwise, pretty much covered all the examples from today. So, all right, I'll give it a few moments if there's no questions, and we'll wrap this up. All right, guys, I think that's it for today. So if you guys have any questions, feel free to message me. You guys can message me on Telegram at Kodi Kai Trades. If you guys want to message me through email, you guys can email me, Sean@KodiKaiTrades.com. Also, if you guys are new here and you guys want access to the strategies, so if you guys want to watch the videos explaining pretty much all the strategies I covered today, just go on the website, KodiKaiTrades.com. Click on unlock your free access right here. Once you click on that, it'll give you access to the free intro course. And then from there, you'll have access to the course right here. Every strategy I've taught to you guys in the past 7 years are all included on here, from the scalping to the intraday trading to the swing trading. Everything's is included here. So if you guys want to see any of the strategies, you know, I share everything that I do. And the reason I do that is because I want you guys to actually use my strategies so I can use that as a proof of concept. You know, if I can make money off these strategies and you guys can make money off it as well, it's got to work, right? So that's why I share my strategy with everybody. because it helps me just understand that my strategies work, and it cuts the time of testing, because you have multiple people testing your strategies. You have a better sample as to like whether they work or not in different types of market conditions. So, all right, guys, I think that's it for today. If you guys have any questions, feel free to reach out. Otherwise,